management on Midcap Radar today. Dabur held its analyst meet just last week, and the company indicated that they aspire to drive double-digit domestic revenue growth in the medium term. They also said FY24 should see growth pick up as rural segment has shown some improvement. They also, in that analyst meet, the capital day as they call it, talk about improving their international revenues, their healthcare business. They plan to double their revenues from the healthcare business, which is a higher margin business for the company. So to talk about all that and more, we're now joined by Mr. Mohit Malhotra on the show. Mohit, afternoon, and thanks so much for joining in. Before we get chatting about the various segments, your e-commerce, healthcare, etc., just a quick word on rural demand. How is rural demand currently? How does it compare to what it was 3 months ago? And what can you guide going ahead as we enter the festive season?
Hi, Reema. Thank you for having me on the show. I think overall we've seen, if I look at the little long-term trend, how the business has been shaping up and how the FMCG market has been shaping up. Past 6 months, we've been seeing resurgence in the rural business. So we saw rural negative around 6 to 8 months back in terms of volume was negative. Consistently, quarter after quarter, rural has been picking up. And this pickup in rural is happening on account of inflation kind of ebbing and softening and moderation of inflation happening, because of which the price increase impact has reduced, and therefore the consumption pickup is happening in rural. There has been a little unseasonal rain that we saw in the month of June and July. That's why the rural consumption got impacted in the month of July. But I think it's all evens out. If you look at past 6 months, I think rural is going to grow. And if you look at around 2 years back, we saw rural was always trending higher than urban. But then COVID came in, and after COVID, again, price increases happened because of a high inflation. But now I think overall I see a long-term trend of rural actually picking up. And if you analyze the numbers, July numbers, if you see, which is the last indicated data which is available with us, we see rural business volume pick up at around 7.5%, which used to be around 5.5% in the month of June. And before that, even lower. The gap between urban and rural is narrowing as we speak. So I think it's a matter of 6 months more and we will see a huge pickup in rural. And rural is a barometer of how the FMCG consumption performance is overall for the FMCG business. That's my take on the rural. Yeah.
Okay. Oh, it's great to hear the word rural resurgence from you, Mohit. So 7.5% is the volume growth for the rural market in July. And what was the urban growth in July?
Urban growth is around, urban is 11.5. So the difference between the urban and rural is a gap of around 5 basis points, which used to be in the range of around 700 or 800 basis points. So 500 basis points now as compared to 700. So the gap is narrowing between the two.
And we don't have similar numbers for August?
We don't have similar numbers for August at the moment. I think it's a couple of days' time and we'll get those numbers. I think August will not be so good because of the rains. But in the month of September, I think it should come back again because the rain deficit is kind of getting covered up in the month of September. So a little dynamic here, but I think a little long-term is with MSPs also going up, more income coming in the hands of the rural consumer, with the election season also coming. There'll be some social sort of funding by the government to the rural also. So overall, all ticks in the box as far as the rural economy picking up long term.
Okay. So, Mohit, from what I gather, it's a little jagged, right? July was good. August is not that as good as expectations. So what would your exit run rate be in terms of domestic volume growth for the fiscal? Do you have that visibility?
Are you talking about FMCG? You're talking about Dabur business?
For the rural as well as the urban market as a whole, for the FMCG space.
Yeah, so FMCG is picking up. So, urban is growing. Urban growth is driven by modern trade, both organic growth and inorganic growth, which is what happening in the channel with the Reliance opening up number of stores and organically Reliance doing well post-COVID. Out-of-home consumption is also picking up. Those are the levers behind the urban growth. And rural, I spoke because the monsoon deficit, if it gets covered up in the month of July and the sowing of the kharif crop being okay, I think overall uptick. So we are looking at around 11-12% growth in the FMCG market. That's how we see the business. 11% growth broadly.
Okay. Y'all, correct me if I'm wrong, but y'all have taken price hikes earlier in the year.
Yes, there was a huge inflation last year, unprecedented inflation at this time, to double-digit inflation in all commodity baskets, whether it's petrochemical linked or it is specialty chemicals or it is herbs or spices, everything went up. So
are there any incremental price hikes that y'all will be taking, or y'all need to take as well?
Now the growth that you're seeing in the business is very volume driven because the price increases have lapped over. No incremental price increases because the inflation is moderating now.
Okay.
Want to drill down to your individual segments. Healthcare, that's about 24-25% of your overall revenues, and you want to double your sales there to 5,000 crore rupees in the next 4 to 5 years. You've got a new leadership in place for the healthcare business, and that's practically your core. Mohit, can you tell us how you've arrived at this target of doubling your revenues, 5,000 crore in the next 4 or 5 years, and is there going to be any acquisition? And with scale, do you think your margins can improve in healthcare?
See, Dabur's personal care business and food business are also offshoots of our healthcare business. We started off as a healthcare company with Chyawanprash, honey, and the entire Ayurvedic vertical are all healthcare products. The hair care products, which are more therapeutic in nature, healthcare, they kind of spun off as a HPC vertical. So healthcare being the core for us. If you look at past 4 years, our CAGR in healthcare has been in the range of around 9 to 10%. And we will maintain those CAGRs. To provide a boost on that CAGR, we are trying to erect a allopathic vertical for advocacy. Earlier, we were only going to Ayurvedic doctors and doing advocacy with them, selling through Ayurvedic chemist outlets or pharmacies. Now we will start going to regular pharmacies and also doing advocacy with allopathic doctors, which is pediatricians, which will be general practitioners, which will be cardiologists, etc. So we are trying to take Ayurveda mainstream. That's why the vision is Ghar Ghar Ayurveda, is what we are saying. That will only happen when Ayurveda becomes a complementary system of medicine like allopathic is today. That's how. So if a cardiologist is prescribing you something for a blood pressure, then ashwagandha to be taken as a stress reliever along with the statin also. So likewise, so complementary system of which is happening today as a home remedy, but the allopathic doctors are not prescribing it. So that is the advocacy vertical that we started, which is new under the leadership of Philip Hayden, who joined us from Himalaya, and that's what we'll be driving.
Okay. Well, Mohit, I just wanted to come back to demand. Wanted your sense in terms of what your estimates are of this festive season as compared to last year?
Yeah, so this festive season is delayed by around 14 days this time. Diwali will be delayed. So last year it was in October. Now it will be happening on the 14th of November. So the loading, etc. for the festive season will get pushed by around 14 days. But I think overall the festive season should be good this time around. Last time it was impacted a little bit because of very high inflation. But I think with inflation ebbing and moderating, festive season should be good. But delayed, the impact of festive season came in the current quarter, but it will come in the next quarter this time of the festive season. Yeah.
You have also entered into baby care and tea. Do you have any growth targets for these two segments?
Yeah, so baby care and
tea.
Right. So therefore, baby care, last year we exited a business of around 20 odd crores, which was only on e-commerce. This year we are almost more than doubling the business from 20 crore to 50 crore, but all getting promoted through the doctors and through pediatrics and through gynecologists, etc. So around 50 crore is the number that we've taken for baby care. Long term, we want to build a larger sustainable business of taking it to around 100 to 200 crore business. So we are strategically investing in baby care now, and we've tested. Proof of concept was done on e-commerce, and we've tasted success there. So we're trying to be replicating that success on mainstream now and building first chemist and before we go to the mainstream. As far as tea market is concerned, we are not operating in the mainstream commodity tea market. In tea market, we'll be operating in therapeutic teas, which are more value-added teas, in which we will give functional benefits of either immunity, stress busting, in addition to the taste profile, which is what most commodity teas promise to the consumers. So Dabur will be operating in more health niche of that tea market, premium tea market. Basically, that's what, yeah.
Oh, okay, all right, Mohit. We're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us more perspective in terms of the Dabur long-term guidance as well and investing into new segments such as tea. Thanks very much for joining in and speaking to us. Quite bullish in terms of the rural demand and the resurgence that they're seeing there. They should probably see, a good 11% growth in terms of urban growth and around, I think, 7% for rural is what the management said. We'll take a short break on that note. We'll come back with more stocks in focus.